Based on predictions from the Office for Budget Responsibility, Jeremy Hunt declared that the UK is currently experiencing a recession. The watchdog predicts that GDP will rise by 4.2% this year, drop by 1.4% in 2023, then rise by 1.3%, 2.6%, and 2.7% over the following 3 years. The report predicts that inflation will be 9.1% this year, 7.4% the following year, and then abruptly decline in the middle of the year after that. They assert, according to Chancellor Hunt, that starting in the middle of the following year, the inflation rate will fall sharply as a result of their current actions. They conclude that the UK is currently going through a recession, just like other countries. In this video, we will talk about how the UK's economy committed suicide. But before that, please like, subscribe, and click the bell button for the latest economic updates. Now let's get started. It took place just 8 weeks after Liz Truss's disastrous mini-budget, which caused economic chaos when the Chancellor unveiled the autumn statement. In addition to outlining his plans for tax increases and spending reductions, Hunt pledged to address the issue of rising living costs and rebuild our economy. Additionally, he announced 2 new budgetary principles, telling the Commons the first is that the underlying debt must decrease as a percentage of GDP by the 5th year of a rolling 5-year term. The second is that during that time, public sector borrowing must not exceed 3% of GDP. The strategy they are announcing today, which complies with both regulations, was continued by the Chancellor. A consolidation of £55 billion and significantly lower inflation and borrowing rates are the results of today's announcement. By using fiscal policy to support the economy in the short term when growth slows and unemployment rises, they intend to achieve this in a balanced manner. The OBR, he claimed, confirms that our plans have made the recession shallower and the inflation lower. As a result of our decisions made today, he continues, unemployment is also lower, with about 70,000 jobs protected. However, the Bank of England has issued a warning that the UK is experiencing its longest recession since records have been kept and has increased interest rates by the most in 33 years. It foresaw a very challenging 2-year downturn for the UK and predicted that by 2025, unemployment would have nearly doubled. Bank CEO Andrew Bailey stated that UK households face a tough road ahead, but added that unless strong action is taken now, things will be worse later on. It caused the largest increase in interest rates since 1989, from 2.25% to 3%. The bank is attempting to lower skyrocketing prices as the cost of living increases at the fastest rate in 40 years by raising rates. The Ukraine war has increased the cost of food and energy, which has put many households in a difficult situation and begun to hurt the economy. When a nation's economy contracts for 2 consecutive quarters of 3 months, it is said to be in a recession. Usually, businesses make less money, wages decline, and unemployment increases. As a result, the government collects less tax revenue to fund public services like healthcare and education. The bank previously predicted that the UK would enter a recession at the end of this year, and that it would last through the entirety of the following year. The end of boom and bust economics is the one thing that the past 12 years have brought about. The UK now enjoys the comforting stability of a persistent recession. The nation is sliding into its 2nd recession in as many years. A sizable portion of the public sector appears to be voting in favor of strikes, and poverty is rising. An article describing how much more expensive it is to live now than it was yesterday seems to appear in the headlines every day. After the autumn budget, everyone will pay more taxes, and even more cuts will be made to public services, including the NHS, according to Chancellor Jeremy Hunt, who has previously acknowledged that the health system is in danger of collapsing. From the pandemic hangover to Europe's energy crisis, there are many global factors that have contributed to this economic downturn. But the UK is struggling more than other nations because of its disorganized post-Brexit government and a decade of austerity measures. The UN representative on poverty informed Rishi Sunak that the time was not right to practice austerity. That's because, according to the Joseph Rowntree Foundation, more than 1 in 5 people in the UK live in relative poverty. This winter, an additional 1 million people will likely fall into poverty, pushing the level of deprivation in the UK to its highest point in 2 decades. The Guardian reported last week that kids are arriving at school with dry cereal, moldy bread, and empty wraps. One head teacher claimed that the situation, including the pandemic, is the worst she has ever seen. Many workers, especially in the public sector, have decided that enough is enough because it is expected that things will only get harder in the upcoming year. Approximately 1.7 million people are either already participating in industrial action or are casting ballots for it, according to Heather, who spoke with the major unions. For many people who have seen their real wages decline over the past 10 years, and then further decline as inflation surpassed 10%, this has been a moment of radicalization. Housing, especially for private renters, will likely become more expensive in the near future, but there is a chance that a housing downturn next year will cause property prices to drop, which could eventually cause rent to drop as well. In the interim, as inflation keeps climbing, tenants will feel the pinch of exorbitantly high rent. But it now thinks the economy has already entered a challenging downturn that will last through the first half of 2024, a year that could see a general election. Although it won't be the UK's most severe recession, it will be the longest since records have been kept, according to the bank. The unemployment rate is currently at a 50-year low. It is predicted to increase to almost 6.5%. Since Liz Truss and Kwasi Kwarteng, the former Prime Minister and Chancellor, unveiled their divisive mini-budget in September, the interest rate has not been announced. Their plans for unfunded tax cuts totaling £45 billion, the majority of which have been reversed, sent the value of the pound plummeting and sparked market turbulence, necessitating the intervention of the Bank of England to calm things down. The most crucial action the British government can take at the moment is to restore stability, organize our public finances, and get debt falling so that interest rate increases are kept as low as possible, according to Chancellor Jeremy Hunt. But according to Shadow Chancellor Rachel Reeves, families cannot afford such high rate increases when we've got rising food prices, rising energy bills, and now higher mortgage rates as well. With the most recent rate increase, the bank's 8th since December, borrowing costs are at their highest levels since 2008, when the UK banking system was on the verge of failure. The bank thinks that by increasing interest rates, it will make borrowing more expensive and deter people from making purchases, relieving pressure on prices in the process. Although savers will welcome its most recent rate increase, those who have mortgages, credit card debt, and bank loans will also be impacted. The bank has given guidance that appears to point to an interest rate peak of around 4.5% next autumn, something it doesn't typically do in the published minutes of its decisions. For those who see the glass half full, this is lower than the 6% forecast just 1 month ago during the market turmoil following the mini-budget. The cost of borrowing money from the government and the value of the pound have partially recovered since then, but the mortgage market and business loans are still under pressure, adding to the economy's ongoing blow. The forecast indicates that household incomes will decline along with an increase in the unemployment rate. The UK is performing worse than the US and the Eurozone, painting a picture of a trying economic time. In fact, what was predicted to be a severe energy recession just 3 months ago is now a shallower, longer-lasting energy and mortgage shock. So, what's your takeaway from this video? Let us know in the comments section below. If you found this video thrilling, make sure to hit the like button. Also, subscribe to the channel and press the bell icon to never miss an update from us. Thank you for watching. We'll see you at the next one. Until then, peace.